Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having a fantastic start to your week. In today's video, we are going over the short-term and macro charts, discussing the recent breakdown from 95.5k, short-term expectations, targets, and the potential for a steeper short-term pullback. We'll be going over the weekly candle close for both Bitcoin and the total cryptocurrency market cap, as well as the broader markets such as the S&P 500 and of course the upcoming interest rate data. Before we get into the video, make sure to smash that like button, hit that comment button and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, just pure raw TA. By the end of today's video, you will have a detailed and well-rounded understanding of not only the short term, but the higher time frame charts as well. If you are interested in more of this kind of content, you can join us on Telegram with the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay loaded for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment in the free channel, contact our admin, check out a 50+ month trading track record, or click this link to watch a 10-minute video showing you inside the VIP channel, what you'll get access to, how it all works, and how it can benefit you. Of course, you get access to two channels, the main VIP channel and the VIP exclusive group chats, trading setups with the exact entries, targets, and stop losses, detailed exclusive analysis, and a variety of group chats with all of our members. Go ahead and check it out and we'll see you in there. Let's jump into the video. So taking a look at the short-term price action, Bitcoin has now broken down from the 200 moving average here on the 1 hour. We have also seen the loss of the 50 EMA on the 4 hour, the first time since we actually broke above the 50 EMA all the way back in the beginning of April. But most importantly, from a horizontal perspective, we have actually now broken below what was once a key level of support, this level at 95.5, showing a degree of weakness moving into interest rates. We can see on the weekly candle, the weekly handle has closed, and we were able to close above that 93.7k level, which was good, but we have seen a weekly rejection from 98,000. We can also see on the total cryptocurrency market, the total cryptocurrency market has seen a rejection now on the weekly from that $3 trillion level, which we know to be a critical point of resistance, which needs to break if the market wants to see the next leg toward the upside. We'll be discussing this and more in today's video. Starting on the market data, 24-hour volume is up 17%, creeping up as the weekend comes to a close at 142 billion. Liquidations up 12% at 167 million, 139 million coming from longs, with 28 million coming from shorts. Moving over to the DXY, the DXY is still sitting around that 100 region, not expecting all that much movement for the DXY here up until interest rates. We do know interest rates is coming now in less than 3 days, and this will have a massive impact on the direction of the DXY. If the interest rate data comes out bearish, and that means we are going to likely see a pause in combination with more pessimism around future interest rate reductions, which will derive from the speech, of course, following interest rate data, then it is likely the DXY will push toward the upside as money will flow out of assets and back into the dollar, strengthening the dollar, pushing the dollar or the DXY up to around that 200 moving average. This will be generally considered bad for risk assets if we do see that occur. Again, for this movement to play out, we need to see an interest rate pause, and in combination with that pause, we need to see more uncertainty surrounding future interest rate decisions, and we'll find that out based on what is said and discussed during the interest rate decision meeting post the actual interest rate data release itself. Now, if we want to see the DXY correct back toward the downside and we want to see assets push upwards, we need to see more optimism following the interest rate decision itself. Either we need to see an interest rate reduction, which is highly unlikely. If we take a look at the probabilities, it's only 2.8% probability for a reduction, so it's more than likely we see a pause. But during the meeting after, we need to see more optimism following this meeting. We need to see signs that the Federal Reserve is, I guess, coming through all this uncertainty recently from tariffs, and they have a more clear path forward for future interest reductions. If we see any optimism surrounding future interest reductions, it is likely the DXY will drop, and it is very likely the risk asset market will continue upwards regardless of how the market looks at the moment. Okay, so it is very important to keep in mind over the next 2 days, the climate for trading is going to be incredibly high risk, because no matter what happens here on the short term, no matter how this plays out, no matter where Bitcoin goes, this has the power to massively alter the direction of the risk asset market, specifically that meeting following the interest rate release. Okay, so we need to be aware. Looking at the S&P 500, as we mentioned in yesterday's video, if the S&P 500 is going to reject from anywhere, if we are going to see a pullback develop from anywhere, this is where we are most likely to see it develop from. This is again going to be a prior area of support. It was once resistance, it turned into support, and now it is resistance again. So a prior area of support becomes current areas of resistance. This is a point of which, if we are going to see any sort of pullback, it will develop from this region here. Now, if we are able to break through this region, and to do so, we are likely going to need to see a bullish result from interest rates. Then it is going to be more than likely smooth sailing back to these highs, okay? So we do want to see the price action break through here to facilitate a continuation upwards. However, keep in mind, if we do reject from here, it is very possible this rejection could take us all the way back down to 5,400, and if that does happen, we will just be establishing yet again a third higher, lower high. So that would be a overall bearish trend still. So keep that in mind, guys. That is it for the broader market. Let's go ahead and jump into Bitcoin. Now, before we get into it, go ahead and sign up to the links down below to BitGet, BitUnix, or BingX. These are the exchange links down below. You'll get a lifetime trading fee discount of 15 to 45% by using these links. You'll support me making the content, and you'll be trading on exchanges I trust. We'll play a quick ad and we'll jump back into a video. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and jump back into it, starting on the total cryptocurrency market cap. Now this chart here, as we mentioned in our prior videos, is hands down the most important chart we need to be watching, as it's going to provide context for the broader market itself. Whether the market itself, cryptocurrency itself, the amount of Bitcoin and altcoins is in a bullish trend, is it bullish or is it bearish? And in this terms, it is very much bullish. The cryptocurrency market itself is bullish. We have established again a new uptrend since these lows of April, and we have managed to clear a monthly downtrend as well as a recent lower high. So we are in an overall bullish trend. However, we have approached a critical area of resistance, that being that 3 trillion level of psychological resistance, and that is actually a resistance range that develops up to around 3.08 trillion, which we can see here indicated by this gap on the VRPV. So we know we have got a critical level of resistance above us, and these resistances, again, prior areas of horizontal support become future areas of horizontal resistance. So we can see that we are coming up to now retest what was once a support between the months of November all the way up into the end of February. So if we want to see the cryptocurrency market as a whole continue aggressively upwards, that being the altcoin market aggressively continuing and Bitcoin aggressively continuing, we need to see the price action break through that $3 trillion level. Now, taking a look at this recent high on 3 trillion, this corresponds with that most recent high at around 97 to 98,000 Bitcoin, which we know to be a weekly area of resistance, having closed out, having reached that weekly level here on the weekly chart, but that being that VRPV peak. Okay, so we know 98,000 is a critical level of historical resistance. So we know that for the market to rise aggressively upwards, we need to use the total cryptocurrency market cap here as, I guess, what you would call a tool as confluence. It is going to provide a very strong degree of confluence for the overall direction of the broader cryptocurrency market, that be altcoins and Bitcoins, if we are able to break through. Now, as it can be used as a bullish indicator, we can also use this as a bearish indicator. So looking at that prior higher low we broke through at around 2.8 to 2.83 trillion, this is now going to be a current area of support. So prior resistance becomes future support. If we see the total break down below this region, that is going to spell disaster for both Bitcoin and the altcoin market, and it is highly likely we will see a steeper higher time frame correction all the way back down to 2.6 trillion, which could result in Bitcoin dropping potentially as low as 89,000. So we need to keep that in mind when we are taking a look at the broader market. Now, the reason we are bringing this up is because, again, we have interest rates just around the corner, and this is going to massively impact the direction for the cryptocurrency market, as we have just mentioned, depending on the overall narrative pushed regarding future interest rate decisions. Now, you're probably wondering why we are stressing this so much. It is very simple, guys. If we take a look at the macro consequence of interest rate reductions on risk asset prices, a very simple flowchart. We've got a few more flowcharts up here, but a very simple flowchart we can look at is simply just the impact interest rates have on investors' decisions, whether that be retailers' decisions or whether that be institutional decisions or companies' decisions to acquire risk assets. And put simply, if we see interest rates fall consecutively, period in, month in, month in, we see interest rate reductions occur back to back, eventually, later down the line, that is going to result in a climate which is favorable for risk asset market. If we see that happen, we will see available household cash flows increase. The reason we'll see those increase is because, again, we will see short-term and long-term debt decrease in terms of the amount of money you need to pay towards those debts. So debt to service ratios decrease, freeing up cash flow, facilitating investing. That happens for companies as well. If debt to service ratios decrease because of interest rates falling, they can acquire more debt at a cheaper cost to purchase income producing assets and then leverage the income produced by the assets to then acquire more debt to then acquire more income producing assets. So again, income producing assets such as stocks, such as cryptocurrencies. So we generally see the market rally in anticipation of future interest rates falling, as the consequence of that is risk assets rise. Now, we know the market is future seeing, so it is not in the process of reducing interest rates we see the market rise. It is in the anticipation of the interest rate falling that we see the market rise to adjust for this process. The market is future seeing, and that is exactly why, if we look at the last 2 years of price action or year and a half of price action for Bitcoin, we have seen this macro uptrend, because it is future seeing. It reacts now and adjusts now to what is expected in a later period. And that is what we're saying when we're looking at the short-term price action. If we see the interest rates come out and the overall narrative is optimistic, we will see the market rally. If the overall narrative is pessimistic, we will see the market correct. So we need to keep that in mind. But looking at the short-term price action, guys, we know already the total market cap is going to be, I guess, the broader indicator for where the market for Bitcoin is going to be moving. So we need to keep an eye on that. If we're looking at altcoins, the same goes for altcoins, guys. Altcoins make up around 30 to 35% of the market share at the moment, so Bitcoin being the main market driver. If we take a look at altcoins, we are still sitting underneath what is our prior lower high, right? This, or should I say, yeah, this prior level over here, we are sitting underneath this level at around 840 billion. For the altcoin market to look bullish, for the broader altcoin market to continue upwards, we're looking 15 to 30% rallies for altcoins. We need to break 840 billion. Until we break 840 billion, we do still run the risk of corrections back down. This is worst case scenario, but we need to break 840 billion to then see rallies back up to 900, 920, 930 billion dollars. Okay, so at the moment, for that to occur, that $3 trillion level for the total market cap will need to break. Let's move over to Bitcoin. So taking a look at Bitcoin, guys, on the short term, it is not looking fantastic. We have now dropped back into this horizontal range, marking deviation above, looking for a retest of our range low now. So at the moment, while Bitcoin sustains below two levels, number one, the downtrend over here, and number two, the horizontal week high, which is going to be this level at 98,000, the expectation on the short term is leaning slightly bearish towards a range low. Now we know if we break the range low, the expectation is back down to 98,000. So that is something we've been talking about for quite some time. If we lose 95.5, the probabilities are now in favor of a retest of the low. If we retest the low, it is more likely we head to 98k than it is that we rally back toward the upside, particularly with interest rates around the corner. The market de-risking into that is usually a wise event. Looking at the 4 hour, we have also lost the 50 EMA over here. Now, the last time we lost the 50 EMA was right over here during this period of volatility, but essentially breaking above the 50 EMA back in around April. Now, losing the 50 EMA itself is not technically a bearish sign, but it is a sign that tells us the volatility has decreased to the point at which the 50 EMA is lost. Okay, so we've seen a significant shift in volatility. To put simple, the volatility in the uptrend, so the bullish volatility has decreased, signifying essentially that the buyers are losing control of this trend, which signifies that the sellers may step in and revert the trend toward the downside. So it doesn't confirm we are going to see a continuation lower, but it suggests that the buyers have weakened to the point of which we may see this trend develop downwards. That is definitely something to keep in mind. Now, when we're looking at momentum, we can see again the divergence here occurring on the 4 hour, this bearish divergence signifying the exact same thing, that the buyers have exhausted essentially at this $98,000 level. This means the $98,000 level is going to be the trigger point for a continuation upward. If we break 98k, it is likely we continue above 100,000. But until we do so, the probabilities are now in favor of corrections into these liquidity levels at 92, 93, potentially even 89,000, provided that high is not taken out. So it is not about being right, it's about probabilities. The probabilities are in favor of corrections, as we are seeing here, that the buyers are exhausting. Now, again, what happens with interest rates, they may massively impact those probabilities, but as of right now, it is not looking fantastic. In fact, this is the first sign of real weakness we have out on the charts ever since really all the way back in, I would say, around start of April. Okay, this has been bullish, this has been bullish, this has been bullish, horizontal consolidations. This is really the first sign of weakness, as we have seen for the first time a horizontal level of structural support that has been developed being lost again. If we look at the breakout here, we've sustained above, we continued upwards. If we look at the breakout here, we sustained above, we continued upwards. If we look at the breakout over here, we saw a slightly weaker breakout, and then we corrected back below. So we've seen some real structural weakness here for the first time moving into interest rates, which should be considered and should be taken in consideration. So, moving over to the daily and the weekly charts here, guys. Actually, no, there was one more thing I want to talk about on the 4 hour, and that is the uptrend we have seen from these lows. Drawing that diagonal trend line in here, we've actually dropped below this uptrend now, which is also something to consider on that 4 hourly. So, do I think Bitcoin is bearish? The answer is no, right? If we're looking at the weekly trend objectively, Bitcoin is bullish. What we have seen here is we've just run into a bit of turbulence, we've run into a bit of resistance after what has been a fantastic rally, and that resistance again is marked out by the $3 trillion level. So if we break this resistance, we will continue upwards. The question is, and the important thing is how low could we reject? And if we reject, at what point do we essentially turn into a higher time frame downtrend? To put that very simple, we could drop as low as 89,000 and still remain bullish. If we lose 89,000, that is when we run the risk of steeper high time frame corrections. But if we drop into 89,000 and find support, we can very easily continue back toward the upside, as 89,000 is a high time frame level of daily, okay, and weekly support. If we look at the daily chart really quickly, it is a horizontal level of support, a horizontal level of resistance. Prior resistance becomes future support. So we could see continuations upwards, okay? It is only a loss of that 89,000 level would we run the risk of then correcting all the way back down below these lows. If we look at the weekly candle close, guys, the weekly candle close was a good sign. And again, it established this weekly level as a weekly support. But this is where the buck comes in. It also establishes a new bearish trigger point, okay? So what we had prior to this weekly candle close, our bearish weekly trigger was 86,000, this weekly high. And now we have got this weekly low at 83.7 that has been confirmed, meaning if we close a weekly candle below 93.7. If we close a weekly candle below 93.7, this would be a reversal signal. So we have 7 days into this weekly candle close. If it closes below 93.7, that is going to be a reversal signal for 89,000. That is it for today's video, guys. Thank you for tuning in. I wish I could tell you more, but of course, the interest rates are going to play a massive role in determining where the market goes. So we need to be aware of that. Thanks for tuning in. Have a fantastic day, and we'll catch you in tomorrow's video. I'll see you then. Bye.